Hi everyone, hope you're all doing well, and today I'm going to talk about the 5 stocks that I bought this week. Obviously this week was mainly focused on a lot of these hyper growth stocks with a lot smaller market caps. They were obviously the big sold off ones and have been the sold off ones for the last kind of couple of weeks. So that's where most of my money went this week, and yeah, I'll share with you 5 that I bought. Normally I post on Patreon exactly when I'm buying and selling these companies, so if you do want to join, the link is in the description. And as well as that, sorry for no video yesterday. I was struggling. I had a little bit of a brain freeze and didn't really have any video ideas for yesterday. So yeah, I mean, if there's any ideas, stick them in the description, the comments, should I say, not the description. And yeah, I'll see. If it gets a lot of likes, I might do that video. But yeah, I had a bit of a brain freeze. The only video idea I did have was like a skills video and going through skills. But anyway, I ended up doing that only on Patreon. So yeah, the only video I ended up putting up yesterday was on Patreon. Which was like a half-an-hour education class on skill stock and some of the things that were going on with that. And that's on Patreon. So once again, if you want to join, the links in the description. And we did a little bit of a subject talking about that and some of the things to take away from it. And yeah, that's what I did yesterday, and a little bit of a Q&A at the end. But yeah, apart from that, I had a bit of a brain freeze to do a second video, so that unfortunately there wasn't one on YouTube, but here we are. Today I'm going to share with you the 5 stocks that I did buy this week, so if you could smash the like button. If you're new, can you subscribe as well? That'd be absolutely amazing. And we'll get started into these 5 companies. So let's go with the most obvious one to start with, which was skills. Obviously, we just talked about that a second ago, and obviously this week it's a hot topic on the channel. I think the skills video that I did this week, actually, it did really well, so I don't know if there's more regular skills videos wanted. Obviously I don't want to base the channel off one stock, but if there's a few more updates out there, maybe I could do this, because it seems like you guys really did enjoy this, the content for skills on this week. But obviously skills is one that I was picking up heavy. Even last week I was picking up heavy. I didn't make this video actually last week, so sorry about that. But yeah, skills was one that I've been picking up quite heavy the last 2 weeks, ever since it got kind of back down into the $21 range and even lower. I was like, 21's not bad, but then my average was 17, and I was actually starting to get prices on skills below my average of 17. 16, 15, 14, and then it even went down to $12. I believe it was on Tuesday, I think that happened, and I was like, what? I was absolutely shocked when it went down to $12. I know, I kind of always struggled to see the day that skills went down to $90, maybe even $17, but $12, I was like, that is just absolutely mental. And I kind of did a full class on this, like I said, on the Patreon, but I was basically saying, you look at the stock chart, and it went from $10 as a SPAC all the way up to $40, and then back down to 12. And you just got to imagine, this is why it's the most difficult time in the stock market, because you imagine from $40 down to $12, how many people have sold out at a loss at that point, and all them sort of paper hands, and then boom, next few days we have the stock go up, and I think it's even up 20% for this week. And all them people that would have sold out and would have lost, and all they had to do is have a little bit of patience, and it comes back. And this is what I mean, the stock market's really easy to do when the stocks are going up. In a bull market everyone looks a genius, but when you actually get tested with them times where the stocks go down, you look at how many people panic sold out, that would have sold out of that stock and would have took a big L on it. And that's the big thing, it's a really big test of your emotions and averaging in and making sure you have your belief in your company. Because in that sort of rate, it looks like the stock's going to go zero, but if you average in, it's the most testing time emotional wise, but it's the easiest time to make money. And from there, you can buy some stocks at dirt cheap prices if you've got the stomach to buy it and make more money, which is the amazing opportunity that we had with skills this week. And I'm sure if you were picking up in that low range, you would have had the nice rebound. And this is also why you can't wait for the bottom in the stock, as I always see people saying, oh, I'll just wait until we see a few days where it doesn't go down. But you wait for that, boom, we're up 30% or something in the last kind of 2 or 3 days, which you can't do. And also it's a test, this is why a lot of people don't make money in the stock market, is because this is the times that emotions get to them. And skills is one that a lot of people would have paper hands and sold out of and took the L. These are the real big challenging times. And this is what I say, I always say on the YouTube scene, when these sort of things happen, you see a lot of people go quiet, or this is the reason they don't show the portfolios, and you can't keep track of the portfolios and stuff like that, because I reckon a few people might get these paper hand situations that we never know about. But I'm a big fan of skills. The funny thing is, Friday was the best day I think in the stock market this week, which was the only day I didn't make a video. But the other 4 days I was always here in the the big bloodbath, and I was always making a video. And then when the stocks went up, I went, okay, you don't need me anymore. I'm gone. You don't need me. You don't need me to do all my pep talks. And yeah, like I say, when the going gets tough, I'm always here and trying to help you guys with the right mindset and everything like that. But yeah, skills is one that I bought. It worked out quite well because I managed to get my average from $17 down to $15, which was amazing. And that means that now, because I have a lower average, I was saying this on the Patreon as well. I'm giving you a lot of little tips here that we covered on the video, but I was saying that now, because my average is $15, if we were to go up to like $40 again, I would make now like 220% or something. Whereas if I still had my average of like $17, it would be like 180% return. I'll try and show you the actual figures that I would make on the screenshots if hopefully I've put it in here. But yeah, like, because my average is lower now, when we go back up to say something like a $40, I'm also going to make more money, which is fantastic as a long-term investor. So yeah, being able to get skills at $12 brought my average down huge, and I'll make more money in the long term now, which is absolutely amazing. And also, funny enough, because of me averaging down so heavy on this one this week, like I was buying, you guys on the Patreon, you guys know like how much I was buying heavy on this one. It actually came like my biggest position at one point because I averaged in so much. And then on Wednesday, Thursday, Friday, we had the jump in the share price, and that pretty much mean that I was down like at one point 20%, and then I was up like 15% on it with a big them 3 days taking it up, and that lift gave it like my biggest position. I was like, oh, so I had to do a little rebalancing, because as much as I love skills, could never be my biggest position, just on the fact that it's such an early stage company. There's a lot of things that it still needs to develop, and it's unprofitable. And those are, I'll never have an unprofitable company as my biggest position. It's just a rule that I have, and also the volatility side of it. So I was like, okay, I've done my job. I've got my average from 17 to 15. I was also sitting on a little bit of a 10% profit as well. So then I also took some money out of skills this week just to get the position size back right. So yeah, funny enough, skills, I got my average down to 17 to 15. And also I took because of it going up to my biggest position and the jump in the share price, I also took a nice little 10% profit on a couple of shares just to rebalance the position as well. So I also made a little bit of money on skills as well this week after all that, which is absolutely amazing. So yeah, skills is number one. There was a lot going on with skills this week, but yeah, skills was number one. Number two was DraftKings. So DraftKings had a little bit of a sell-off this week. Everything in this kind of sector had a little bit of a sell-off, like the G-Nogs, the gangs. They're all kind of selling off this week, maybe just a little bit of rotation once again. But yeah, DraftKings is funny because over the last kind of like 2 months, it's been bringing out more and more like great news, and the stock kind of shoots up like 10% after hours, and then it just kind of gives it back across the rest of the week. I mean, like, one of the big news that came out is like, I think it was like the official partner for like the NFL, which obviously is great, to have like the major sport in the US, and even it's become quite a worldwide sport at the moment. I mean, I'm sure some of you guys might even watch the NFL now. The amount of games they're having in England at the moment, but DraftKings, I think it made a partnership with like the NFL, like as the main partner, which is absolutely amazing. Like the one partnership you would want, and obviously the ties between them two have always been quite, they're getting closer and closer. So I mean, that's amazing. And the amount of people at the moment that say like are watching sport events in America, like the UFC or something like that, and they've got like DraftKings around the ring and on the cap, and like, look, is that company we were invested in? They're there, and it's like, yeah, they've got the right partnerships and the great partnerships going on at the moment. So yeah, DraftKings at the moment, I think it's just having a little bit of chill out, and I think this year will be another great year. I think this year could be the chance where we see it actually push into the $100 range. It does trade at a decent valuation, but it deserves it because it's going to be absolutely amazing over the next few years. And yeah, I think like when it pulls out the Michigan numbers this year, as well as some other states it's moving into, honestly, I'm really excited about this company. I'm a big fan of this one. Out of like Gang and G-Nog, it is my number one favourite. It's why it's my biggest position. And yeah, I really like what's going on with this one anyway. Number three, Tattoo Chef. So I did buy some more shares in Tattoo Chef. Obviously, this one had... I've been holding off buying a lot of Tattoo Chef recently because my average is something like the $17 range, and it was trading at like $19 for ages, and I was like, I just don't want to average up a little bit more. Like, my favourite thing to do is averaging companies when I'm down, because then you bring your average lower. But averaging up, you're always bringing your average up and you make less money in the long term. It's not huge, but it's just the little things that, fine lines and all that, and having a little bit of patience. And there we got Tattoo Chef. It started dropping below my average. And I was like, right, here we go. I can go buy some shares. So yeah, I've not really bought too much on Tattoo Chef for like the last few weeks. And I got the opportunity and I bought some more shares into it, and I'm really happy about it. I think there's such a strong company. I think there was the little bit of as I always say, I think there was the CFO leaving. I think there was some uncertainty that was created around that stock. Seeing there's a lot more shorts out there as well for this one recently. There was that uncertainty with like the CFO leaving, and then I think there was a few rumours going around of like, oh, the CFO's leaving because he's not happy with what's going on in the company. And then obviously it was times with Sam Galletti selling some shares, and yeah, the whole bears are out in force on this company. And I'm generally not worried about it, and I took the opportunity to buy some more shares. And my Beyond Meat position has been like my number one position over Tattoo Chef. I shouldn't say number one. My Beyond Meat has been bigger than my Tattoo Chef for the last kind of few months, but I think now Tattoo Chef has gone back over Beyond Meat now. So Tattoo Chef is definitely working its way up to one of the bigger positions once again. And it's always one that I thought, I need to have this as a bigger position, because when I look at Tattoo Chef, I just look at it and I just go, I just can't see myself losing money on it. It's just so clear how good the product is and how good the management is and the deals they have in place, that I just look at Tattoo Chef and I just go, I just can't see losing money on it. It's just one that I have a lot of confidence in. It was about time I did pick up some shares in this one. And the last two was Huya and Gang. So I did pick some shares up in this one. Huya especially, I didn't really expect it to drop down to this low where it is right now. It doesn't normally go much lower than this, so I'll be really surprised if it does go any lower. But yeah, this is very much like Tattoo Chef. I look at Huya right now or what's going on, and I think it's just the uncertainty of the merger that's keeping it down. And I just want the merger to be done with. Either they're going to merge with Douyu or they don't merge with it, because I feel like the uncertainty and investors not knowing if they're just buying Huya or they're buying Douyu and Huya is what's holding the stock back. But nevertheless, when this company kind of gets that done out of the way, which should be soon, you look at the company and you think, right, you're picking up a company that's profitable, growing profit at, I think they grew like 100% profit last quarter, growing revenue at 30% rate, has an amazing balance sheet, trades at a forward P of 16. And you look at Huya and you think this is just insanely cheap. If you were to run the numbers on it compared to something like a Bilibili, for example, which has gone up like 700% in the last kind of 3 years, you look at Huya and you think this Huya should be a company that's very much like a Bilibili, and this company should be at least double where it is right now. But I generally think like $40 stock to in the next kind of 2023, 2024, an $80 stock, it should be much higher than this. And I think it's just a waiting game until the merger's done, and then people will wake up and see how great of a company this is. I mean, to have a 30% revenue growth company trading at a 16.4p is just, it just blows my mind how cheap it is. And crazy how much that's gone down. So and number 5, Gang. So I did pick some more shares up in Gang. I pulled my average now down to about $18 on that one. And Gang is one that obviously Q4 wasn't amazing, but the problem is that we need new launches for that to happen, which has happened. Obviously, very much like DraftKings, the Michigan launch is gone ahead. Obviously Q1. From what I can see, Gang is going to report. From what I heard in the earnings call, they said May on the earnings call, so we'll see. We don't have to wait that long. We're probably only going to have to wait 4 weeks or something. We get Gang to report some earnings. I'm sure the Michigan numbers will be good. I say good, excellent blowout numbers. And then when we have that, maybe Wall Street wakes up and realise how good these two companies is. I think they've already realised how good that one is, but maybe this one, because this just trades at, you run the valuation on Gang to DraftKings, it's so much cheaper. And if Gang put out their outlook at like the end of March, and their outlook was like something like 100%, 120%, maybe 110% revenue growth for this year. And they said that that's based off what they've seen on Michigan. So if they're raising guidance through 2021 and putting their guidance up for like 110% revenue or 120% revenue at the end of March, they have a good idea how their first quarter's gone. And clearly, if they think their first quarter is absolutely amazing and they're very confident to put that numbers in, normally Gang do a little bit of like sandbagging in the numbers, they must have had a blowout Q1. There's no way they can offer guidance of like 120% revenue growth in 2021, and have that knowledge of Q1 and kind of like overshot it or expecting too much. I think they know they've had a blowout Q1, and I think that's why the guidance is so high. And if they do manage to hit their 2021 guidance on revenue, and it's not a company too far off profit either, it has a chance of getting profit. We'll see. We'll have a good idea in Q1, but because the difference is with Gang, it doesn't have to do all these promotional offers like a DraftKings and the skills, because it's the actual platform. But yeah, Gang, I think they're on for a Q1 that's going to be blowout, because I don't think they could give that guidance without knowing how good that first 3 months are. So yeah, it looks like Gang, we'll know more in the next few weeks, but I think this one could be one. I don't do too many short-term predictions, but I think this could be one that might not sit around at these prices for too long after earnings. So we'll see what happens. Obviously that's a short-term prediction and I don't like doing them, but at these sort of valuations, and if it does put out the 2021 that it's set out now, it should be good anyway. So yeah, hope you enjoyed it anyway. These are just talking about the 5 stocks I bought this week. Sunday, tomorrow, I was thinking of doing maybe 5 stocks that I'm watching that are kind of dropped at the moment, that I've been watching this week. The thing with this week is that I kind of wanted to prioritise buying 5 companies that I'm really bullish on, and these 5 are them companies. Like, I think these are great companies at great valuations, and this is why there's so many opportunities out there with the growth stocks selling off that you could have bought a few things, but I wanted to try and make sure I build up 5 really good positions in 5 companies that I really like, which were these guys. But yeah, there was a few opportunities out there that stocks were selling off, and there's a few other kind of growth stocks that I considered maybe buying. So maybe on Sunday, if you guys want to see it, we'll do a 5 stocks that I'm watching kind of series, or 5 stocks that have sold off, with the kind of growth stocks that dropped off that I didn't buy, and I haven't really covered on the channel that much. So maybe I can do that on Sunday, hopefully. Let me know if you want to see that. But yeah, that's the video for today, guys. Anyway, I hope you enjoyed it. Smash the like button if you're new, subscribe, and I'll see you in the next video.